Hey everybody, what's going on? It is James here with Crypto Common Sense, and I wanted to shoot a market update video for Bitcoin and the rest of the broader cryptocurrency market because today is obviously August 1st. Before I jump into the content for the video though, please remember I am just some guy sitting in a spare bedroom, which means that nothing in this video is financial advice. Nothing in this video is trade advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, or precious metals. Now, do me a favor before we go any further, hit that thumbs up button and make sure to subscribe to the channel if you haven't already. So obviously we are in August. The year is nearly 2/3 over, and it has been over 3 months since Bitcoin put in its all-time high back in April. Not surprisingly to me, this market never changes, and markets as a whole never change because humans don't change. They're emotional wrecks, and they use their emotions to determine the actions they take in most, if not all, aspects of their life. So for those of you that watch the channel, you know that a couple of months ago when Bitcoin crashed, I specifically said that I would be watching for a retest of the supply zone between 45,000 and 49,000. And over the last couple of months, I've repeated that thesis time and time again. And I watched as people on social media were super bearish back here talking about going down to 20,000 and how this was gonna, cut deep and all this kind of stuff. And I'm watching now as the same types of people turn around and start talking about this being a bull market again, and this is a new bull market and all these things. And quite frankly, after doing this for over 4 years, I'm just tired of the bullshit. I really am. It just wears me out trying to be a voice of reason in a sea of insanity, because you try to sit and you try to educate people and you try to show people the right way to go about this stuff, and you're dealing with non-stop hype and nonsense. People going out there and taking out loans against their crypto so that they can over leverage themselves. People going out there and using 50x and 80x and 100x leverage because they're gambling, not trading. Once in a while, you'll have somebody who gets super lucky and gets rich off of trading that way. But for every one person that gets super lucky like that, there's hundreds or thousands of others who have completely wrecked themselves, destroyed themselves financially, lost spouses, lost families, over this kind of stuff, lost jobs. And most of the people who do end up getting super lucky actually pat themselves on the back and think they're some kind of genius. And so they keep doing what they're doing and they end up losing everything. I'll never forget reading about a guy a few years ago who had made like $4 million in the 2017 bull run. And he had written an article, encouraging other people to learn risk management and to learn proper trading, because in 2018, he lost all 4 million. He gave it all back. And it's the same thing that's going to happen in this market. It's the same thing that's already been happening. There were a lot of people who actually did become wealthy, or at least very well off, turning, a few thousand or maybe 10,000 or so into over $1 million in this. But there was also a lot of the same people who were still over leveraged up here and gave it all back on this drop. So I don't have a crystal ball, and I don't ever want to pretend to have a crystal ball. Nobody knows where the market is going. The only thing that we can do as human beings and as traders is look at a chart and say, what is this chart currently telling us about this market? And the reality is I don't understand how I can see the same people making the same mistakes year after year, right? I shot some videos. Let's just look at Bitcoin, not the total market cap. Over the last few weeks, I had shot a video specifically saying that it was very unusual to put in more than 3 red candles in a row. I didn't expect we would put in more than 3, but if we did, I thought the 4th candle would be a small red candle, maybe an inside bar type of candle, and then we would start to move up for our complacency bounce in what is very likely a bubble that has popped, right? And now people are acting like, oh my God, Bitcoin is, look, Bitcoin's went from 30,000 all the way to 42,000. The bear market is over. Why would you think that? The chart does not support that. Now, I'm not saying it's impossible that Bitcoin can't ever go up here. I'm not even saying that it won't go straight up to 100,000 from here. Those are things that are certainly possible. What I am saying is the chart does not support that nonsense, right? This chart went up. Here's your low. So yes, you could absolutely get this higher high if you wanted to look at it as a monthly chart on this monthly, uptrend. But what's most likely going to happen is exactly what I've been talking about, this being a bubble, this being the first dip or bear market drop, whatever you want to call it, followed by some type of complacency bounce up into the supply zone. And then, and only then, will people finally realize, oh my gosh, this really is like a real bear market. That's probably what's happening, okay? Because you're not normally going to just move straight down in a market. That's why the saying exists. Markets don't move in straight lines. They can move in straight lines under certain circumstances, especially if they're heavily manipulated or if they have very, very low market caps. They can be easily pushed around and moved around. But in something as liquid as Bitcoin, it's a lot harder to manipulate it. Not impossible. It is manipulated. There's always a certain level of manipulation in every market. For example, the Tether printing last year was able to basically create a straight line up. So it is possible that manipulation happens, but you're normally not going to see a straight line down. Okay, you're normally going to see the staircase pattern, the lower highs, the lower lows, etc., etc. All right, so before I jump into all of my charts that are all mocked up and marked up, I just want to kind of go at this with a fresh look, right, a clean slate. So if we're looking at our weekly chart, okay, what we see back here is we see this huge spike in volume. Now, this spike in volume was actually liquidations happening. So like if you go look at Google, it'll say, oh, high sell volume is super bearish. But it really depends on where that sell volume is happening at. When it's happening at the bottom of a move like this, it's normally those last holdouts giving up hope and closing their positions and capitulating, right? So you get the big red volume bar like this. But what you're seeing here is you're not really seeing a ton of buying volume pushing this back up. What you're really seeing are liquidations or short squeezes, right? You can go look at the data on this and see how many people were liquidated. And that's what kind of pushes us back up. Up here we have this whole zone, right, which is going to act as supply. And to really start talking about a bull market, you've got to be able to clear this zone first, right? Now, if it clears this zone, obviously then people talking about bull markets would be completely justified in doing so because you've taken out the all-time high, you've taken out all the zones of supply, and you basically just have open air above you, right? But right now, this is just a big zone up here. People who are buying up here, now they've gotten fearful, and there's a good opportunity for them, if price were to move that high, to sell and at least get out for even. And a lot of people will be looking to do that. That's what creates supply, okay? Actually, the video is probably going to be super long if I don't use my mocked up charts. Let me jump over to those. Right, so this is a weekly chart here. Obviously, this is that same zone that I've been talking about for a couple of months. We came around, we bounced right inside of it, bounced right at the bottom and up, right at the top of the zone. We're moving up toward that ever so important 19-week moving average. That is a line in the sand. It is completely normal and completely expected to retest that line in a bear market, right? So for example, in 2017, we topped back here, we fell down, came back up, had a bearish retest of that moving average, and then boom, down she went, right? And by the way, this bounce right here, 100% bounce. That's price doubled on that bounce. All right, same thing happened in 2019. We can see that price skyrocketed up, price fell back down, had a bearish retest of the 19-week moving average, and then down she went. Now, this is up for debate over here, and I don't really care what people believe because it doesn't change anything. I believe that it was always likely to go down to 4,000, which is a call that I've been making for some time. Other people believe that it never would have went there and that this was going to be a new bull market. Who cares, right? I don't really care about this. I care about this. There was the bearish retest, which was completely normal, had the big 44% pump, liquidated a lot of bears, and then down it went, right? So 39% drop from there, okay? So here we are, we're in 2020 at this point. You guys, if you watch the channel for a while, you will remember me specifically saying I would not be shorting Bitcoin right here. They just put in a tweezer bottom on top of that 19-week moving average. And in fact, what I was looking for at this time was, I said I thought it would go to 11.1K and then probably drop from there. What actually happened was it went to 11.1K, fell about 10%, tested the 19-week moving average again, and then just exploded off of it, right? So I let my bearish bias get the best of me, because even though this 19-week moving average, and even though the tweezer bottoms, even though this range back here, you know, consolidation and then retesting the top of it, even though all of those bullish things were happening, it was enough to make me say, I'm not going to short this, right? Which obviously saved me from losing money. But I was so bearish in my mind that I was afraid to take those longs, and obviously I missed out on some easy money there. And I feel like that's kind of what people are doing now. A lot of people, right? They see this thing coming down, they see this thing coming back up, and if it gets to that level, I think a lot of people are going to be saying, well, it kind of looks bearish. I don't want to take out new long positions, but I don't think I'll short it either. And that's, everybody has to make their own decision. But statistically speaking and historically speaking, this 19-week moving average, and you can go back further in history and look at previous bull and bear markets as well, this has been a good line in the sand. Now, if we were to, you know, break above this and start showing some really bullish consolidation and things, I would actually be totally fine saying, hey, this has got some bullish momentum for it. But I can't sit here now in good faith and say that I see bullish momentum, because I don't. Price is still under the 19-week moving average. Price is still under the 200-day moving average. This price moving up, the volume is not that great. It's basically a short squeeze, right? I just don't really see any reason right now to be overly bullish. Now, that being said, there is absolutely nothing wrong. I don't care what anybody says. There is absolutely nothing wrong with taking a long just because you think it's a bear market. Just because it's a bear market doesn't mean you can only short Bitcoin. This is a very slow moving chart. It's a weekly chart. So you can be bearish and think this is a bear market and still, you could have still taken a long back here, and that's perfectly legitimate in my opinion. You don't have to sit and only play one side on a weekly time frame. Right? If we pull up the RSI again for a couple of months, what I talked about was how I did not think it would break out the bottom of this box, because those are normally capitulation events like you get here and back here. I thought that it would probably, bounce off the bottom at some point, literally exactly what it did. And I thought that it would go back up to test the top of the bear market RSI box, which is exactly what it's doing right now. Happens to be very, very close to that 19-week moving average at the same time. So again, these are all things that I specifically pointed out 2 months ago, right? 2 months ago. So no, nothing that's happening right now is a big surprise. Nothing that's happening right now is out of the ordinary. I'm not looking at this going, oh my gosh, I never could have saw that coming. This is pretty textbook stuff, okay, so far. If we take a look at the 3-day chart, again, same type of thing, consolidated along the bottom of this box. So this was actually the last bear market back here, came down to the bottom, right back up to the top, bottom, top, so on and so forth. So here we were consolidating along the bottom. Now we're moving, I had the hiccups, I apologize. Now we're moving back toward the top of the box. So this is very interesting, okay? I don't really care too much about moving averages on the 3-day chart. So that's kind of what I'm seeing on the 3-day. Obviously, we had this lower low, this lower high, this lower low, and this is just a range right now. So I'm not really looking at this as like lower low, lower high, lower low, lower high, lower low, right? It's just a range. So it's still inside of this same range. It's trying to peek at the top of it. And I do think it's got a little bit room to go a little bit higher here. If we take a look at the daily chart, what's very interesting about this is the trend line that I talked about in previous videos. And we did come up and we tested it today. This is not a short that I took. It's not even a short that I would have recommended taking. Very, very risky trade. Yeah, it would have worked out. Could have scalped it for a couple of percent. I don't really know where you would have set a stop loss on something like that, right? Maybe if you zoomed in, on a small enough time frame, you could have found something. But on a larger time frame, there's really no, obvious stop loss. So that's not a trade I would take. But we can see that it did bounce right off of that trend line. Okay, our 200-day moving average is currently sitting right around, let's take a look, 44.7K. I think it's got a good shot of testing it. I really do. And I like how it's sitting right around that zone, that 45 to 49K zone that I kept talking about for a couple of months. It's sitting right there. So I'm curious to see what happens if it gets there. And I do think at this point, it's very likely going to test that moving average. But look at the daily volume. Big volume spike back here where a bunch of people got liquidated, left a big wick behind. decent volume, now volume is dying off. Okay, so again, not a lot of bullish momentum sitting there. If we look at the RSI on this, it's already into the overbought territory. Not the best thing to see when it hasn't really picked up volume yet. Okay, so that's what I'm seeing on the chart itself. I just want to point out, I'm going to jump over to Twitter because that's where I made some posts about this. Hopefully this doesn't look too terrible in the video. My screen recording software is not showing me my recording window for some reason, but it is what it is. So if we go back in time, this was posted up. You can see the date on this chart was June 26th, and this is what I expected, this move back up toward that zone, and then a drop in consolidation. I don't care about any of this stuff right now. None of this stuff matters, right? I'm just saying, like, this idea of bouncing and suddenly it not being a bear market, it's nonsense, right? Price moving up, it will move up in a bear market. That's just the way it works. I still think this is what's happening. Now, this is a post that I made literally in May, okay? Over 2 months ago, this was the post that I made showing how this market cycle was looking, in my opinion. Okay, now I had posted up something back in this area here, also thinking that the top could possibly be in, and I said then, it takes out 42K, the idea is invalidated. It did take out 42K and it went higher, right? So I don't want to make it sound like, oh, this is the only time I thought the top might be in. No, I absolutely was thinking this might be the top back here as well. Difference being is back here you basically just had a dip, and then further upside here you had actual consolidation at the top, which most often is going to be distribution. Okay, and that falls into the Wyckoff logic and everything like that. So of course it dropped down, and again this was posted way back in May, and even back then you can see that I was drawing this to go back up and retest this zone. At the time the zone was looking more like 50 to 55K for me, so that did change a bit. The zone got moved down some. This was the Wyckoff post that I did back in April. This chart was actually posted April 13th. And you can see here, this was when the UTAB was happening, which I had predicted, right? That was literally like a few days before the top. And if you look at this, this is what I want you to look at, not the call itself, that doesn't matter, right? You do tend to move down, and you do tend to get this consolidation and this chop before finally capitulation takes place and you move back down closer to the start of the markup phase, okay? The markup phase didn't start at 30K. The markup phase started back around 10K, all right? So just a couple of things I wanted to point out. I think it's very hard for people to look at this chart, this market psychology chart, and say that this is not complacency. Where do you think we're at on this chart? That's what I would say to somebody that says we're in a new, not a new bull market, but someone that says, oh, this is still the bull market. Where do you see on this chart this huge 3 or 4 month dip and then a whole bunch of more upside? Because you don't get that, right? What you get is basically once the market goes parabolic, you get the rocket ship up, you get the first major dip, and then you get the complacency bounce before all hell breaks loose. So when I look at this, what I see right now happening to me, I'm just saying it looks like a complacency bounce. Again, I don't have a crystal ball, and no, I'm not selling 100% of my crypto because I don't think it makes sense to do that. I think when you sell 100% of your crypto, what you're really saying is I know what's going to happen, and I don't know what's going to happen, right? But I can honestly say that I've sold most of my crypto, right? So if I'm wrong, I'm wrong. Truth be told, and this is just being a little more transparent than I even need to be, but truth be told, I hope I am wrong, right? I've got some stuff I'm working on that I don't want to talk about too much publicly, but I will just say this. I'm looking at the potential to launch my own token. I don't want to launch a token in a bear market. I don't want to launch a token in a market that's hurting or consolidating. I would much rather launch a token in a raging bull market because that makes it much easier to succeed. So the other thing I would point out is a lot of people have asked me, James, what do you think about these comparisons to the 2013 market? And I understand why people would ask me that because the 2013 market had this really weird summer as well, where it actually had its own like bubble. It ran up from like $20 all the way up to almost $300, like 15x, which is pretty close to what Bitcoin did over last year. And then it fell, and then all of a sudden, people are thinking it's done, and then boom, it just exploded. So is it possible that we're seeing a repeat of 2013? Sure, it is possible. Anything is possible, right? Again, I don't have a crystal ball. The reason I don't think it's what's happening is because you had very different market structure, right? what we saw in 2013, which was obviously before I was trading Bitcoin, but what the market saw was this huge pump up. It actually saw this dump, which was like 80, almost 81%. And then what you saw was sideways consolidation, right? And it broke north. Now on the flip side, what we've seen in 2021 is very different. We saw the sideways consolidation not at the bottom, not, straight up, straight down, consolidate, and then more up. We saw it at the top, which again is a sign of distribution. Also, this drop was nowhere near as big, right? This is only 55%. Every bear market in Bitcoin's history, every real bear market has cut 80% or more. Now there was the bear market in 2019, a little different, right? I still consider it a bear market, but it is a bit of a caveat to this because it happened in the middle of what ended up being a much bigger bull market, right? So it's kind of like a mini bubble. At the time I was calling it an echo bubble, and I think that's still accurate. So this only fell about 70%, 71%, 71.5%, right? But even that, even a 71% drop from where we're at would have put Bitcoin way down around $18,000, $19,000, right? This would be totally new market behavior. Again, not impossible, right? Not impossible. But when you start banking on this time is different, you just need to realize, hey, I'm betting that something is going to happen that has literally never happened in the history of the world. All that being said, again, I am just some guy sitting in a spare bedroom, which means that nothing in this video is financial advice. You should always go out there and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, stock market, or precious metals. If you enjoyed this video, be sure and give it a thumbs up. Make sure you subscribe to the channel and make sure you check the description for a link where you can join Patreon for just $7 a month. That supports the channel and gives you access to more frequent updates. Or you can check for a link down there where you can join Pancake Profits, which is my DeFi trading course. I should really say it's more my students' DeFi trading course, right? Most of the content was created by a former student of mine who became an amazing trader, and he went over to the DeFi space, started out with a $2,500 test account, turned it into over $100,000 in roughly 6 or 7 weeks, and we put together a course together, right? Most of the content on the DeFi side was his, most of the TA side was mine, and people have seemed to really enjoy that, and we've seen a lot of success stories coming out of that course. So if you'd like to join that, there is a link down in the description. Just a heads up on the pricing itself, it does change. So every time we fill 100 spots in the class, we actually bump the price up. Right now we're in the second 100, so still really good pricing on that. But after we fill that second 100, which right now I think we're around 157 people, after that fills up, it'll go up again, and after the 300 fills up, it'll go up again. After the 400 fills up, so on and so forth. So if you are interested in that, don't procrastinate. It is definitely time sensitive. All right. All that being said, this is James with Crypto Common Sense. I hope you're doing amazing. I hope you're trading safe. I hope you're making tons and tons and tons of money. And I'd love to hear about it if you are. Have a great weekend. Have a great week. And here's looking forward to an amazing August for all of us. All right. As always, please remember to trade safe.